Today is Monday, May 23rd, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the grains this morning, Steve, last week the grain markets tested new highs before a late and steep sell-off. Why did the market sell off, and are we close to near-term support here?
I think that two things. I think number one, the market followed the stock market sell-off and concern about inflation and lower food and energy demand. And I think that we also corrected, at least in corn and wheat, an overbought technical situation. Some people thought that last week's highs reached an objective and was actually starting to ration demand. I think when we look at today's market, corn and wheat has found support. I think wheat's found support because of the fact that Russia did not agree to the UN proposal to allow a corridor for Ukraine exports. And also, I think we have to be a little bit worried about global weather and the fact that it could reduce this year's wheat supply. And I think in the corn market, again, we expect higher U.S. corn export demand because of the lack of Ukraine exports and the possibility of less exports out of the South America. Soybean market, though, is reacting to President Biden's comments over the weekend that the U.S. would use troops to support Taiwan. I think that's a little negative to the beans, and the White House was quickly to retract it and say that they're not thinking about either using troops or changing policy or going into lowering Chinese tariffs. And so, but I think the soybean market is nervous about that might slow or damage U.S.-China relations and slow their buying of U.S. beans.
Steve, what's the latest on the U.S. proposal to allow Russia to open up a corridor for Ukraine exports, India wheat exports, and Indonesia palm oil exports? And of course, how would this impact futures prices?
Well, wheat and corn's rallying because the Russians declined that proposal by the UN, and they continue to shell and attack the ports of Ukraine, especially the Odessa, damaging grain export facilities. Also, they're now targeting rail facilities to try to slow Ukraine shipping grain out by rail. As far as Indonesia is concerned, first they said they were going to ban palm oil exports. They are the largest world exporters of palm oil. Then they came back and said no, they weren't. And then now what they've said is the exporters have to satisfy domestic sales first before they will get any export permits, which is helping the soybean oil market today rally from the recent lows. And as far as India is concerned, there's about 2 million tons of wheat that is sitting in the ports ready to be exported without paperwork. And India said that they probably will let that wheat go. But the problem is that the USDA thought that India would ship 8.5 million tons of wheat. Instead, it looks like India may have to import 3 million tons, and Bangladesh and Pakistan 5 million tons combined because of dry weather. And so that really upsets the global wheat matrix and is, I think, bullish all these things: corn, wheat, and soybean oil.
Steve, final thing, weather. What's the latest on U.S. and global weather and the potential impact on prices?
Well, I think with this active jet stream and rains across the Midwest, some of the meteorologists, including our own, is beginning to back off a little bit from the threat of a drought this summer. They still think that we could flip the switch late June, July, and have some dry weather in the southern plains and in the western Corn Belt. But with this active jet stream, we're not probably going to see the drought that would cause a very severe shock type rally in futures. But we do see more rain from the northern plains and eastern Canada, which would jeopardize plantings of the spring wheat. So I think in general, we've flipped from a possible sharp rally to sharply higher prices to a gradual rally this summer due to the fact that demand is bigger than supply.
Thanks, Steve. And looking at the financials, what are the main potentially market moving events this week?
Okay, well, first of all, we have Fed Chair Powell scheduled to speak tomorrow. And then on Wednesday, we'll have the minutes from the most recent FOMC policy meeting. Those are from the May 4th meeting. So I think Powell will probably remain hawkish in his commentary. I believe he'll probably continue to hint that the Fed will be raising rates by 50 basis points at the June 15th meeting, probably another 50 basis points at the following meeting. So overall, I think the commentary will be a bit on the hawkish side.
And looking at the Fed and the interest rates, how high will the Fed rate advance to in this current cycle?
Okay, well, right now, the financial futures markets are suggesting that the Fed could raise rates up to 3 to 3.25. That would be the Fed funds rate. And that would be sometime by the middle of 2023. However, after that, I think there will be pressure on the Fed to hold off on hiking rates. And maybe by the end of next year, there will be some pressure on the Fed to actually start becoming or talking about becoming a bit more accommodative.
Alan, can you speak to the fundamentals that are behind the interest rate market futures performing so well in the last few weeks?
Well, what we are apparently seeing are head and shoulders bottoms in the interest rate futures markets. And I think that the charts, as they often can be, are getting ahead of the fundamentals. So I think the fundamentals will follow from what we are seeing in the better patterns on the charts. So I think what we are likely to see is better news on inflation coming. I think that inflation is peaking. Of course, inflation will remain very much a problem for quite a long time. But I think we are seeing peak inflation rates in the charts on the interest rate futures markets, may be sensing that as well. So with that in mind, I think that I would be using any breaks that we are seeing in the financial futures markets, at least in the interest rate futures markets, such as the one we are seeing today, as buying opportunities. I think we're going to see higher prices for these markets.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.